and start recording now. All right, hello everyone. Welcome to Evaluating Crypto Projects for Efficacy and Profit Potential. My name is Kenneth Hurley. I have a pretty interesting background in a lot of different areas, and so I joined Max Mayer's channel and as kind of a mentor and somebody that can give a lot of information on crypto, but also in other areas. A little bit of background about myself. I've been a lifelong learner, mainly self-taught on a lot of stuff. I started out programming indie games in like 1981, 82, somewhere in there. I was on the VIC-20 and the C64. Some of you may not even know what a VIC-20 is. And I learned Pascal and 6502 assembly language back then. I then proceeded to get a game job at a company called Dynamics. I did sort of Kadash for the Atari ST, and then I wrote something called Copy 2 ST for the Atari ST and a shape icon editor, which I called Scheist. And then funny story about that is somebody actually from Germany said, "Oh, you know what Scheist means in German?" And I was like, okay. It wasn't. It's very good software. It wasn't crap software. So it was kind of funny. The name kind of stuck and did pretty well. I also taught myself 8086 and 68000 assembly language, and I wrote Rampage for the IBM PC, the Apple II, and the Amiga. And then C was just coming out, so I taught myself C on the Atari ST, and then I also taught myself C++ from a book that came out when it first came out. A little bit of background, I worked for Electronic Arts. Most people know it as EA these days. It stands for Electronic Arts. I actually worked for them twice in the 90s. I still enjoy programming. I have a computer science degree, but I was self-taught and in the video game industry and programming for about 20 years. And then I went back and got my computer science degree afterwards and challenged a lot of courses and just so I could have the piece of paper on the wall that you can see right up there, actually. Everything I do in my life and in my career is to try to find efficient solutions to problems. In fact, my wife calls me the master of efficiency, which is interesting. And I took a company public in 2005 after I worked for NVIDIA for 4 years. I fully vested out of NVIDIA, and I started a company called Signature Devices and a subsidiary Graffiti Entertainment, which was a publishing company for video games. So we published games on the Wii and the PlayStation Portable and the PC and Xbox as well. And after taking the company public and spending about 10, 12 years there, I decided I would go back and get my MBA degree. So I did that as well, 15 years after the fact. I basically got an MBA degree just so I could have a piece of paper on the wall. And actually, it's not on the wall yet. I got to get a frame for it, so it's kind of interesting. When I had my company, I got involved in cloud through Amazon Web Services, AWS, because we had a gaming company and we had a rack of servers in Fremont at the Hurricane Electric company. And I saw cloud come along and I said, oh, this is very cool because now I no longer have to go down and, rework the Linux boxes and, swap out hardware and fix hard drive down failures and all that. And so I immediately went to cloud and saved also. It went from, $500 a month down to about $50 a month on cloud. And I was very happy about that. And it could scale very easily for any future stuff. Currently, I work at Google as a technical program manager. I use that mainly to fund the development of this crypto project, which eventually I will probably leave Google as soon as this is fully funded and it's fully up and going. And I architected and patented a token system called Genius Tokens, and I'll talk a little bit about that later on as an example of how to do due diligence on token projects or DeFi projects. It's not a DeFi project, but I'll do analysis on DeFi projects or DeFi projects, as well as crypto token projects, which are more utility tokens that you can use for things like doing artificial intelligence processing, which this particular crypto does. So this first story is going to be very interesting because when I was working at NVIDIA, I was employee number 249, and I worked there from February 1999 to March 2003. And this story, you'll realize why I'm telling this story and why I'm kind of passionate about due diligence, and why I'm giving these talks and want to help people to avoid some of this. This NVIDIA story is really, really interesting. So I was granted about 20,000 shares. It might have been 25,000, but 20,000 works. Shares at $6. I interviewed in like November of 1998, and they wouldn't hire me because right away because the IPO was going on, the initial public offering, and they had to wait for that to all finish up. And then I was almost the first employee right after the IPO happened. I came on, and everybody else pre-IPO had their shares at $3. I wasn't really happy about it because theirs was half the price of mine. So ended up opening an account at Charles Schwab, and it was a margin account. Didn't know much about margin trading or anything like that. I just knew, oh, I could borrow against my stock and do things. And a few years into the NVIDIA stock, as I was investing it, somewhere around 2001, Charles Schwab broker calls me up, says, hey, got this great company you should buy called Lucent. And, you know, it's like $80 and it's taken off to the moon. And by the way, 84 was the top of the dot-com bubble for them. So I bought a bunch on margin thinking, oh, you know, I got all this NVIDIA stock, you know, I'll just make some more money on buying this Lucent stock, it'll go up, all will be good. Well, so in 2002, there was an incident that drove NVIDIA stock down to about $20. In fact, I think it was lower than that even. The CFO of the company had misstated some expenses and things like that, and without admitting guilt, you know, she settled with the SEC and everything. But it drove down the stock quite a bit, and I had margin calls that wiped out 90% of my NVIDIA stock because of that. Lucent also was coming down and got down to about $2 before they reorganized. And you can imagine, you know, buying a bunch of stock at $84 and it going to $2, how much of a margin call you're going to get on that. So it pretty much wiped out almost my entire NVIDIA stock. So here's the real pain points, and please don't feel sorry for me. This is interesting. Here's the splits. If I was able to maintain that stock, it split 5 times. So if you multiply my stock by 48, 2 times 2 times 2 times 3 divided by 2 times 4, that's 48 times. I would have had 960,000 shares of NVIDIA stock today. $231. I basically lost $220 million in NVIDIA stock because of a broker telling me, hey, this Lucent Technologies is the next thing and they're taking off to the moon. So yeah, it took 18 years to get there, and you know, it's to me it's paper losses, but it is still painful. But I like to share this just because that kind of was a very expensive lesson for me to do my own due diligence and not just trust the opinions of other people, especially brokers who are just trying to make a commission on things. So yeah, it's a painful story, but I'm hoping that I can kind of give everybody on the call and anybody viewing this later the tools necessary to kind of do their own due diligence in the crypto space, because I see a lot of similar things coming in crypto where people are going, hey, buy this, buy that, you know, on YouTube and pumping and looking at all these different cryptos, and they don't really do an in-depth analysis of them. Max does a pretty good job. I like what he has to say. We're on alignment on a lot of stuff. Maybe his timing's a little bit off. Like, I'll give you an example. ADA, for instance, I believe Cardano and ADA is going to be a good project and do well. I don't think it's going to be in the next 1 to 2 years. I think maybe 3 to 5 year range, then it's really going to be taking off. But I'm very patient. I'm willing to wait for that. So I have a good investment in Cardano and Bitcoin and Ethereum. So again, why did I tell this story? You need to do your own due diligence to protect your own investments. I have other stories about things where when I started a business that I can tell a little bit later about how you can protect yourself from stock options if you're going to go into a company and you're looking at stock options as part of your compensation package, how they can basically, how you pretty much get nothing in the end, and all on the promise of, you know, that our company is going to be the next billion-dollar company. And then if you start doing the math with the stock options they're getting you, I've had several companies offer me stock where it'd be like an extra, you know, $50,000 or $60,000 per year over 4 years. And I'm like, okay, so you're going to cut my salary by $30,000, but then I'm going to get an extra $60,000 4 years from now. It just doesn't add up. And so these live calls is what's going to help you understand kind of how to do kind of a top level due diligence. But I can also dive deep too into actually the code and things like that, because I came from the gaming industry. I did a lot of video games myself. I did the coding. I still code to this day because I like it. To me, it's just all problem solving. But one of the things that I wanted to make sure is that there's two different types of due diligence in my mind. One's the speculative type, where there's a lot of gambling, and I do some of that. It's fun. Things like, you know, exotic stock options like an iron condor and things like that. And all this was born out of this one, you know, broker telling me to buy Lucent stock. I basically said, never again am I not going to be that naive about things. I'm going to learn everything I can about investing and stock, and this is translated to cryptos. And then there's the long-term investment, which I really feel is a wealth builder. And long-term can be anywhere from 10 to 20 years. And as you see from the NVIDIA story, you know, 18 years, 224 million, you know, I would have been off on some Caribbean island right now and retired if I had that kind of wealth, probably just investing in crypto projects myself, doing the due diligence. Your best asset, though, in this is critical thinking. And what I mean by that is the ability to analyze both sides of the equation, including the negative and the positives, because there's a lot of YouTube videos and YouTube channels that I watch. Some of them are very negative, and some of them are very positive and over positive. But you have to take that with just as a data point, but take it with a grain of salt, realizing that these people are, you know, it's an opinion. It's not necessarily fact, but it's good to get some of the facts and extract that from some of these YouTube videos. But your worst enemy in terms of making money and building your wealth is fear, really fear. Time is the second one. And what I mean by time is you got to have patience a lot of times. And I'll give you for an example. I recently had done some dollar cost averaging and bought Bitcoin and Ethereum right before it plummeted about down to 30K. I had bought in, and I was always doing dollar cost averaging. I was making money, but I got a little bit of FOMO because it was going up at the 64,000. I bought in, I saw it coming down. I did a little bit of dollar cost averaging, got it at 56,000. Well, you know, a couple of weeks later, it was down to 30,000, and my portfolio was down pretty much 50%. So it was at about $90,000. And most people would be like, "Oh God, sell! You know, I've lost half my money. It's $100,000 out of your bank account." And I didn't, because I know that these projects and Ethereum and crypto in general is the future in Web 3.0. And it may take some time. It may take 5 years from now, 10 years from now. But I really think that, you know, it's going to come back. Of course, it came back and I made money, and I continue now to kind of dollar cost averaging. But it's kind of my one part of my crypto, or one part of my entire portfolio. So time is kind of your worst enemy if you are impatient. You got to be patient. But I think the biggest thing is fear. Fear causes a lot of anxiety with fear of missing out, FOMO. I kind of have inverse FOMO when I do dollar cost averaging, which I don't know if anybody else has. This is where I'm starting to watch it go down, and I kind of go, okay, I do 2%, then I do, a third of my portfolio, I do 2%, then another 2% as it comes down. I'll do another third of my portfolio or my cash into it, and I'll do about 6 to 8% total drop in that. But I just bought some Bitcoin recently because it dropped 2%, and I bought a lot of it in fear of missing out. But I try not to. I know that I'm never going to hit the bottom, and I'm never going to hit the top when I sell. And if you keep that in mind, you're probably pretty good on the kind of speculative trading. So some of the data points that I use in my due diligence, Max Mayer, of course, I like a lot of his stuff. He's very well-spoken, eloquent, and he also gives a lot of good data points and also risks, which I like. If you watch a lot of the other people that are pumping some of the crypto stuff, I can't watch them because they're like, oh, it's going to $1 million, or Shiba Inu is going to $1, and everybody's like, oh yeah. And really that's not reality and never will probably be reality. It may go to $1, but it's whether or not you're going to catch it, and it's very hard to catch those things. So these are a few of them that I watch, and I'll update the slides to show a couple more. But takeaway from this is you got to use these as data points. Don't take this for gospel. I mean, Max Mayer's got a pretty good track record, which is great, of a fire and forget kind of portfolio. But in general, you still, it's some of it's his opinion, right? And it's not necessarily going to be a fact on something, but he does trade very well with his, but he sells and makes a profit and or takes a profit when necessary, which is really good. But again, I guess the takeaway is use these guys for data points in your due diligence. And then if you want to go deeper, that's kind of what the rest of the slides here and talking about this is what I'm going to talk about for doing more due diligence in a speculative project and a long-term kind of utility token project. The difference between speculation and long-term is like, does the crypto system have a utility? For instance, if you're on an Ethereum smart contract and then you have an external reason business use for that crypto token, and you're not marketing it as kind of an investment, then it's more than likely a utility. Bitcoin is pretty much speculative, purely a store of value, which makes it speculative. And here's my current portfolio. And like I said, speculative is not bad, but you got to treat it like gambling. And if you want to maintain your wealth and build it up, I currently keep around 25% of my portfolio in cash. That's good enough for 1 to 2 years of if I lose my job or my health deteriorates or something like that, just as a kind of a cash reserves. And then I have about 50% in stocks, including my 401k. Of course, I got Google stock and other stocks that I've traded, some of my old company, Signature Devices, and a few others. And then I reserve about 10% for speculative plays, which, a speculative play, if, let's say it goes up 1,000x and I put 25K into it, it's pretty good. So, but it's kind of hard to find the right one and find the ones that are going to do that because there's so many of them out there. And then, of course, 15% I put in long-term crypto project investments, mainly in my own currently, because I see a very good utility for the one that I've put together. But I've invested in other projects that I see out there, but I do a deep analysis on their code and other parts of of their team and things like that. And then I kind of waited. I waited a little bit, maybe not so much different than Max does, but I weight speculative, non-speculative, which would be a utility token, differently than I do speculative weighting. Teams, this is one thing that VCs do. And by the way, I live in Silicon Valley, and Sand Hill Road is about 1.5 miles from me. And if any of you aren't familiar with Sand Hill Road, that is VC Central here in California. But I have a lot of friends that are VCs, and I have a lot of my kids go to school with a lot of VCs kids. They're not all bad, but I'm kind of not enamored with the VCs in general, and that's why I like the crypto space. But they also, and even Max has said this, that the team is what's important. But here's my weighting: the team. You have to look at the team. You have to look at their background. Prior projects in the crypto space, I don't give that a high weight necessarily because crypto's so new. Well, I mean, in terms of Ethereum and Cardano and all that, they've been around 5 years, and in the grand scheme of things, that's not very long in terms of technology at all, but because it changes so quickly. So the length of the project, I give about 10% weighting with 1% to the length of the website existence, because websites are being updated all the time. They can change URLs, anything like that, like ours changed URL, but I do look at the website and kind of look at how professional it is. And so I give that a low weighting because I know people are updating that and trying to make it look more professional, especially when you're a startup. So that's kind of a low weighting for me. And then code. Now, code is very highly weighted for me because I have a coding background. And the reason is because I want to see whether or not they are kind of two things. If they're making this decentralized, and secondarily, if they are they're on track to finish the project. Very, very important, and to make sure that there's no bugs and there's no security issues in it and things like that. And then transparency is very important to me too, because if they're not going to post their code and talk about their project and things like that, that's pretty important. And then the white paper for me particularly is very interesting because I can read through a white paper and determine whether or not that white paper describes kind of the project, and I can see their vision. And then liquidity is very low on this because startups and new crypto projects probably are not going to have a lot of liquidity. I'm looking at the 3 to 5 year time horizon for a lot of these projects. And liquidity is very difficult to do unless you pump and market the heck out of the thing. But it is something that I do weight a little bit. So on speculative weighting, things like decentralized finance, teams a little bit less important, not that much, but I think what it kind of shifts a little bit because the code in DeFi is a little bit less important than an actual project that has utility, but it's still important depending on the background of what they're trying to do in the decentralized finance. Transparency is still pretty high. White papers, okay, but I think the overall, this is kind of a weighting for what I would do for speculative, which isn't much different than the non-speculative weighting. Some of the other speculative weightings that I do for non-DeFi projects, like trading Bitcoin, trading Ethereum, which aren't really DeFi projects, but are speculative in nature. I'll do swing trading analysis, trends, technical analysis, volatility, dollar cost averaging type of things. So that's kind of a third type of speculative, a third type of weighting for speculative that are not DeFi decentralized finance projects. And then, of course, options trading. I taught myself all about calls, puts, iron condors, a bunch of different, very exotic um, option trading. There, it's mainly probability, technical analysis, and trading volume. Not too interested in the projects or the companies that much, because I'm all about making sure that the options are profitable. Like I said, there's different types here for how I weight multi-leg exotic options, including the iron condor, strangle, straddle, and this is some of the weighting that I use. And then day trading, this is what I would probably weight, but I would not recommend day trading. You're competing against high frequency traders that have algorithms and things like that, and unless you want to spend a lot of time doing that, and I don't, I don't feel like spending 8 to 10 hours a day analyzing stock and trying to beat the high frequency traders at their own game and things like that. I'd rather, do projects and things like that. Now, some of you may want to do day trading, but I don't particularly, it's not my cup of tea. So I'll give you a speculative example, and I'll share some of the screens when I analyzed it. Maybe we should pause here, because before I go into this, I just want to see if anybody wants me to answer any questions, kind of what I've gone through in any of the previous slides. I'm okay with answering questions. I want this to be kind of more interactive. There's quite a few more slides for a speculative and a non-speculative example, and I can show my my screens and show you kind of how I look and do due diligence on certain companies and coins. You want to open it up?
Yep, feel free to unmute. We unmuted everybody, so if they want to chime in, they can.
Stop sharing so I can see the screen.
I have a question.
Sure.
When did you start feeling comfortable with crypto?
I'm sorry, when did I start feeling comfortable with what?
With crypto, sorry.
With crypto? Sorry,
Yeah, she said when did you feel comfortable with crypto?
Oh yeah. So I started back in 2016. Actually, I was watching it, and I was watching the Bitcoin when it was trading, and people were buying pizzas for 10 Bitcoin and stuff. And I was like, oh, this is an interesting technology. I think I really got interested when Ethereum came out, because I saw the utility of it, and my career was focused on 3 different areas that kind of overlapped with crypto and really decentralized web in general. I worked for NVIDIA for 4 years, where I was heavily involved in the GPU industry, the graphics processing unit industry. And then games, of course, there's NFTs all over the place in games now, but I saw the value of embedding cryptos in games to trade in-game items, which is basically an NFT back then. And then because I got involved in enterprise level software because of my experience with AWS, and then Google asked me to come work for them on enterprise level software stuff. I saw the utility of a decentralized system instead of the centralized infrastructures like Amazon Web Services, Google Cloud, Amazon Azure. It just kind of gave me a light bulb going off. As like, look, this is the future. This is Web 3.0. I can see this. And that's when I kind of got interested. And then I wrote a patent based on my my experiences in my career for the 3 different things that made me come up with, or allowed me to visualize a patent that was the future for. You got to think of the thing that I did is kind of, you guys are probably familiar with the Internet Computer, IGP. This is like the GPU side of that, basically. And so that's kind of how I got interested, because I've always been interested in technology. And I saw the future back in like 2016. So that's about the time I started getting interested in crypto.
Cool. Thank you.
Yeah,
I also have a question.
sure.
Hey, so in relation to just the overall growth of cryptocurrency, do you believe that there's going to be a winner per se, like how Bitcoin has been like obviously the dominator in the space, but do you think people will eventually have to choose one and Bitcoin will be the most used cryptocurrency, or do you see the overall market like winning in terms of altcoins and other projects?
So now, again, do your own due diligence. This is just my opinion, but I'm giving it from a technical standpoint and some of the things I've seen in business. Bitcoin will be around for sure because it's a cryptocurrency and it's a speculative and it's a store of value. Ethereum, of course, is going to be around because everybody in their big companies are adopting it. You have J.P. Morgan, who, Jamie Dimon on the one side says, oh, cryptocurrencies are a fad, or Warren Buffett says it's a fad, but it's going to be around because then they're adopting it as well in the back end. I know that's public information that JP Morgan is using crypto and Google itself is starting to get involved in it in various ways. But I think some of the other projects, it's going to act a lot like the internet.com bubble. You'll have a bunch of top winners. I think Cardano will be there because it offers something unique, but there's going to be this fight between Cardano and Ethereum when Ethereum basically does Ethereum 2.0 and proof of stake, because then the transaction costs are going to come down. Then there's going to be a bunch of little businesses that are going to survive that things like they're going to find niche markets, like my particular project is going to do artificial and machine learning processing, which is going to be a niche market, but it's going to take away from the centralized companies, because once it becomes decentralized, then the centralized companies can't compete anymore, because if you're leveraging millions and millions of devices and you don't have to pay for the infrastructure and you don't have to maintain the infrastructure, you can charge whatever you want, right? For the decentralized side, they have to maintain the servers and the electricity and pay for all that. So they can't charge whatever they want in order to make a profit. But when does that transition happen? To me, probably 5 to 7 years, maybe a little bit longer. I'm always usually a little bit optimistic on things. And so I've learned to kind of give it a couple more years for it to transition. But I think DeFi is a lot. DeFi, however you say it, decentralized finance is a little bit different, because there's one of the recent Federal Reserve chairmans said that 95% of crypto is a scam. He's partially correct on that, mainly in the DeFi area. And one of I've seen thousands of DeFi projects come and go. They just put out a smart contract. They're pumping and dumping. And this happened in the stock market as well with what they call pink sheet companies. And actually, my company that I had started was a pink sheet company. And I saw a lot of Chinese companies come in and basically pump and dump their stock. They would pump it up, oh, we're doing these wonderful projects. And then all of a sudden, 80% of them would crash because they were fake companies. I think a lot of that's going to go on in DeFi too. And U.S. citizens are going to get they're going to get, what's going to happen is the SEC and FINRA, which is the Financial Instrument Something Regulation Agency, which is kind of the strong arm of the SEC, the Securities and Exchange Commission, is going to start regulating cryptos in general, especially the DeFi ones, because they're a security, basically. The ones that are going to survive are ones that are utility tokens and don't either go public and then they can be regulated, or they're going to not be regulated because they're utility token. But a lot of the other ones that are, you're going to see niche markets. Like there's going to be one group that's going to be like NFTs, right? And then there's going to be a lot of small players. But in general, I think it's going to go the same way as the cloud. You're going to see like three major players. You have Google, AWS, and Microsoft Azure. You have Oracle and you have IBM that do cloud too, but nobody hardly knows about them or hears about them. It's going to be kind of the same thing in the crypto space, but how long it's going to take to shake out could be 2 to 3 years before everything shakes out.
Appreciate the answer. And I don't want to take up anybody else's time, but just to kind of follow up on that, like, so do you believe we should, not, obviously not financial advice or anything like that, but do you believe it's smarter to diversify a bit the portfolio in terms now of, you know, being a little earlier in the crypto space? Is it better to diversify or to pick winners in the space, like how Chainlink is now, you know, partnering with Cardano, with ADA? So like, should we be picking one or kind of, you know, expect the overall growth?
You know, you can only diversify so much, right? If you pick 2,500 stocks and one of them went up 2,500, it's, you know, you're kind of out the money anyway. So this is why the due diligence live stream here that I'm having is because, you know, I saw somebody maybe ask a question how you can identify a utility token, and I have some slides that maybe we do next session if we run out of time today. It kind of goes over how to identify a utility token versus a decentralized finance or a speculative token. The easiest way that I was able to identify ourselves as a utility token was actually got an attorney opinion letter. There's this thing called a Howey test that allows you to, there's four tests, and if you fail any one of them, basically, you can be considered a utility token. But this is strictly opinion, but law is really a subjective thing. And, you know, laws are written in such an ambiguous way that's why we have so many lawyers and so many judges. They get to interpret the law, right? And so even though something like my project has a pretty good, solid attorney opinion letter, the SEC has attorneys that could come in and say, well, you did this and you did that. And so that kind of pushes you towards more being a security. So we're going to regulate you, right? So in general, you kind of have to be very careful when you start your project that you don't promote it as an investment. Because as soon as you do that, the SEC is saying, oh, well, you're probably a security then. And that's what a lot of the SEC feedback has been that I've seen out there on YouTube and when they've testified before Congress, is when they say 95% of the crypto projects are in violation of security rules. And that's the reason, is because they promote it as, hey, you're making an investment in here. Just like if you bought a security or stock in a company, you plan on making money on that based off the efforts of the company. Where a decentralized project, if it's decentralized completely and everybody is contributing to the project, then you're not really buying stock in a company and leaving up the earnings and stuff like that to an external part, and it's not really considered a security then. So it's a very fine line you have to walk. And if anybody wants to see the attorney opinion letter that I paid to have, that kind of solidified it for me that our project was a utility token. And I kind of look at those 4 different areas and analyze whether or not they would be a utility token or a speculative token.
Hi, I had a question.
Sure.
Kenneth, thanks for that. I think I just probably going back to the basics. I think, we all know what Bitcoin and, is trying to achieve and what one is trying to achieve through the decentralization process. The way I see it, I mean, in terms of risk, I'm a crypto investor myself, but I'm kind of, in terms of risk, I mean, you're actually going against, obviously governments, political systems. You're trying to actually, in terms of, the current day currency versus crypto getting adopted as a legal tender. In the current environment, it's a power struggle. So you really don't, I can't really see that, gaining, or rather, I don't see that succeeding easily. So, I mean, what is the actual risk? Although there are, these smaller countries have started accepting it as a legal tender, but what are the chances? What are the risks that, this may never see the light of day in terms of getting it adopted as a legal tender, because I see countries now coming up with their own digital currencies. That's a different story. But in terms of adopting a decentralized mechanism and really going with what this is truly trying to achieve, means a lot of people are going to lose their livelihoods and lose what they're in this game for. So
yeah, and so I've done over the years. I've done a lot of educating myself on fiat currencies, the Federal Reserve, all kinds of numbers of things. And this, again, this is just my opinion and what I've gathered from this. But in my general opinion, I think they're too late. I think the genie's out of the bottle, because unless they shut down the world and everybody agrees there's some new one world government that says, sorry, we have our own thing and you guys got to stop using Bitcoin. The genie's been out of the bottle for 10 years now, really, with Bitcoin. So trying to stop it now, I mean, they could try to regulate it in the US, but then people will move offshore, go to the Caribbean, start things, go to another country that's crypto friendly. There's Antigua and Barbudos that are crypto friendly. They're St. Kitts and Nevis is crypto friendly. There's a bunch of other countries that are crypto friendly. So in general, what I see is that, one, and I know what you're talking about, the US government is very concerned, in my opinion, with crypto because they are the dollar, the currency reserve, right? The world reserve currency. So, but they're going to do everything in their power to try to stop it. But in general, when it's so decentralized and there's no way, the only way that I can think of that they could possibly stop it is shutting down the internet, and they're not going to do that because even in China, they try to block people from accepting crypto. They're using VPN. They're getting past the Great Firewall of China. I'm not too concerned about that. But then again, if you look at my portfolio, I only have about 25% in crypto, right? So I have my other 25, 50% in stock and 25% in cash. So I wouldn't, if this is not advice again, but for me personally, I would never recommend somebody throwing their entire life savings into crypto. That would just be bad.
Right. And Kenneth, sorry, just on that question quickly, just one last piece, given the volatility that exists in cryptos, right? Getting to kind of see it getting accepted as a legal tender, I mean, where do you see that kind of stabilizing? And the reason I say that is because if currencies fluctuate the way they do currently in terms of the crypto market, it's really not something one can rely on, right? I mean, your purchasing value or power, it goes for a toss. So, I mean, where do you see that stabilizing and how will that happen? Yeah.
I think the ETF is going to, the new Bitcoin ETF is going to start to stabilize it a little bit. To be honest, though, I like the volatility if I'm a trader. It's very good for dollar cost averaging and making money on it. It's a lot harder to make good swing trading things on stocks that are 6%, 10% swing in either direction. You make a lot of money per day depending on your portfolio. Swing trading, and swing trading is not a daily thing. It's like a week. Can be 3 months at times. Mine's been 3 months at a time where I basically did a swing trade and it went against me and I just held it and said, okay, well now I'm a holder for three months. But I think it's going to stabilize in not dropping too much once it's starting to do that now because the crypto mining part for Bitcoin, they're limited supply. And so that's really means up and to the right direction permanently, right? Because it's scarcity of assets or Bitcoin as a store of assets. Ethereum, I think, has something similar, but they still have unlimited supply. I don't know what they're going to do with 2.0. But I see that any crypto that you find that builds in scarcity like that is or burning of tokens is actually a good thing, because that means the value is going to be deflationary and kind of means it's going to go up to the right no matter what. Because when you start burning coins or burning dollars, if you will, and they're not available, then your purchasing power goes up. But stabilizing, my gut is telling me and by the way, everyone, I go with a lot of my gut on a lot of this stuff, including trades, because, and I'll explain that in a second, but it's telling me probably 2 years from now, it's going to start to stabilize where it may not fluctuate more than 2 to 3% a month. Right now, though, as you know, it can do 9-10% in a day, right?
Yeah.
Fluctuations, go down 5% or even go down. I've seen it fluctuate 30%, but it's usually not in a day. And I see it kind of. You can see in the charts, it kind of does that now, right? It used to fluctuate a lot more and it's sticking in these channels and starting to fluctuate a lot less. But with the adoption and the ETF, I think that's going to help the fluctuations quite a bit with the influx of institution money starting to take hold. It's going to start fluctuating less and less, but I don't think it's going to be real soon. I mean, probably 2 years where it's going to start to stabilize.
Thanks, Kenneth. Helpful. Thank you.
Well, I'd like to leave this open, but I'd like to present one more slide. I do have well, I'll put these slides online for you guys to look at. The second session, I'll go over how to analyze and look for a utility project and then a decentralized finance project and how to analyze them and kind of dive in deep. But I also wanted to give the options to everybody that's on the call or anybody that sees it in the future of where they'd like me to go next in terms of what they would like me to talk about live stream. Because like I said, I have 30 plus years of technology experience and I'm very up to speed on the technology side of crypto, and but other centralized systems as well. And I can even talk about video games. I've written a bunch of video games, so I can even talk about that side of things if somebody wants to talk about NFTs and where I see the NFT market going in terms of gaming. Because I have a lot of ideas that fit into the different cryptos, and I kind of envisioned this back in 2016. Didn't know anything about non-fungible tokens per se, but it really is kind of very similar.
I have a question for you, Mr. Hurley.
Sure.
If I've had an idea in my mind for many years for a video game, and I've even thought, well, I could take this idea and put it into a story or a script or something, but I haven't taken any action. What would you suggest with something like that? Because the concern is that I share the idea and then somebody takes the idea and then that's that.
Yeah. So I've run into this quite a bit throughout my career where somebody has a pretty good idea but didn't want to share it for that exact reason. But I guess unless you're going to be willing to share it or learn programming yourself, you're going to have to share it sometime in order to get it done.
Right.
But I have several games in the works that are my own ideas that have been in the works for years, but other things have gotten in the way, probably similar to what you're saying, things like Google work and things like that. But I still love to do it on the side. I think you should learn Unity. Unity is fairly easy to do, and you almost don't need any programming experience. And you can mock up a prototype of your game in Unity fairly quickly, and it's free for that. So that would be my suggestion. Just grab Unity because it's fairly, might take you a little bit of time, but it's fairly easy to learn.
Excellent. Thank you.
Yeah. And I saw somebody asked a question about what games I've worked on. So let's see, started with Sword of Kadash for the Atari ST. If you go to Moby Games, you can look me up there, and also kennethhurley.com. You'll see a bunch of the games I worked on. I did Chuck Yeager's Air Combat Simulator. I worked on Medal of Honor with Electronic Arts, but I was on contract. And then we published about 20 or 30 games where I was the publisher, but I also did a lot of coding and architecture for a lot of them. Probably the Rita Rabbit series, for instance, I did all of that on the Wii and the Nintendo DS. Those are mainly ports from a 20-year-old product, but and then trying to think of some of the other games I worked on. There's so many of them. Yeah, if you go to Moby Games, you'll see the list there.
I have a question.
Sure.
So, obviously, when I look back 20 years, the internet technology, right, the year 2000, and then I think probably around the year 2010, when, the smartphones came in, the adoption of internet technologies went really high, and come 2020 now, we just cannot think of anything except, everything on the phone. Likewise, if I see the world of crypto or blockchain, the year 2010 and now 2020, probably 2020 is or 2021 is in the middle inflection point. What would you recommend to people who are in technology? What kind of programming languages or technologies they can study to learn more about blockchain and cryptocurrency?
So there's all kinds of different languages that it's written in, and I think it's going to be based on the uh, the project and the conditions, or the general direction of the project. And I'll give you an example why. So our crypto project, which is genius.ai, if anybody wants to check it out, we have to write in C++. And the reason is because this is going on mobile devices. It can go on an Xbox. It can go on Internet of Things devices. It can go on laptops. It can go on pretty much any device that has a GPU on it, even servers inside a rack. So it's very difficult, and in fact near impossible, to write a cross-platform technology like that unless you're using C++ or C, because a lot of the projects don't, or a lot of the devices don't use Java, for instance. For instance, the Xbox and all games, most AAA games are written in C and C++. And it's a lot easier if you write the C++ once, and then 90% of it goes across different platforms. But I know I love C++, but I've been using it for 20 plus years. That's not everybody's cup of tea. It's a very structured, kind of more difficult language to learn than like JavaScript or Java. So those are two other ones, though, that you can learn, because there's a lot of web technologies that use JavaScript and allow you to use, like, for instance, WebGL, which is a JavaScript interface to the graphics GPU for Chrome and things like that. Now, the one place that C++ kind of falls down is when you want to do a web app, for instance. But there's something called Dart, which is interesting. And Dart is a Java-like language that compiles to C++ when it needs to on a device, but it'll compile to JavaScript for web-based things. And we're actually using that Dart and something called Flutter, which is very interesting for our UI for our project, because that allows us to go on the web and all these devices at the same time. The underlying interfaces, though, all for the devices all go to C++ calls, because we're accessing the GPU on those devices for our project. So that's kind of my recommendation. It's either, depends on where you want to go. There's a lot of money to be made in, if you want to make good money, some of the newer languages like Erlang or Rust or Java. Well, Java's not a newer language, but you can still make good money. But if you really want to do a project that's completely cross-platform, or you're looking to do games, C++ for AAA games. You can learn C# for Unity if you really want to, but that's kind of where I would steer people, because Java and JavaScript are pretty good, because Node.js is a JavaScript-based project that runs on devices. Another language that's interesting, and maybe something that I would consider, is the Go language, because that cross compiles as well into, but it's a fairly new language, and there's not a lot of supporting, there's a lot of supporting libraries, but not as many as there has been for the last 20 years in C++.
Thank you. From the time we started this call to now, I've refreshed the coin market cap. Probably there are like 5 to 6 more cryptocurrencies added. I think right now it's at 13,185 cryptocurrencies. Why are there so many cryptocurrencies? And why, like, who is creating these currencies?
Well, that's an interesting question. And like I said, that's why one of the Federal Reserve chairmen said that 95% of crypto projects are fake, because it's very interesting. 5 years ago, you could just create a very, very sparse white paper and get 50 million to 400. I've seen people get 400 million on something. I looked at the white paper and go, wow, you're just describing something that's very, very simple, and there's no details, there's no meat in it, and you got $400 million in funding. And so people latched on to the ability for people to want to get into, on the ground floor of these projects that are going to take off, like when Ethereum was, or Bitcoin was $3 and they see the money in it. The problem is that you get all the people coming in that are a lot of fake projects. So they could be fake projects, but in general, anybody that gets listed on the coin market cap, we're not listed on coin market cap, our project, and there's a good reason for that. It is very hard to get listed in there unless you're a fake project. If you haven't been around for a while and you don't have a good base, what they do is they go and they hire a marketing person to basically start trading the stock, and they're fake trades. They're just trades between two groups or two people, and they get the number of addresses up to, like, I think it's 5,000 now in order to get listed on CoinMarketCap. So they build a lot of fake users into that, a lot of fake marketing to kind of pump their stock or their coins to get it on CoinMarketCap, and then they turn around and try to raise money off of that.
Thank you.
Somebody else, okay, took your hand. Well, we're out of time now. I look forward to the second half of this. I'll probably end up doing another recording next week. Feel free to put your questions and things like that, and I'll do a Q&A system after the next session. And I really enjoyed this one. I love talking to people about technology, as you can imagine. And feel free to ask me any other questions about any of these areas that I've been in. I'm more than happy to share. And the reason I do share is, like I said at the beginning, I like people to be successful. It makes me happy when people are successful.